Okay. Hi, Christelle.
Hi, Sandy. How are you?
Good. How are you?
I'm good. Happy New
Good.
Year. Can we
Thank
still say
you.
that it's February?
I know, but that's okay. How's it going?
Good, good.
Awesome. So today, so we're back. We took a little break from our Facebook Lives and we're back now again. And we're going to be doing updates monthly on the real estate market, financing. So if you're watching live, put a where you're located in the chat there so we can see where everybody's located, and invite you to ask any questions that you have about financing. You can type them in the chat there and we'll answer those questions. And yeah, let's go from there. So Christelle, exciting things happening in the market. Crazy market. We have like a half a month's inventory right now, which is leading to some like really exciting things happening. I guess exciting is the only word I can use. So tell me a little bit about what's going on in the financing world. Like I know a lot of people are asking about rates increasing. Tell me a little bit about what's going on.
Yes, yeah, the market is the activities are still very busy, but last week the Bank of Canada actually announced that they are going to we all knew that the rates were not going to we all anticipated that rates were not going to increase right away, but the Bank of Canada uh, kind of said announced that they are going to start increasing the rate. We anticipated that maybe the increase will start in April. The first rate hike will be in April, and that's because we have to be mindful that we just also are reopening after the lockdown that we just had recently. So there's
Yeah.
been a lot of people working in the service and hospitality industry that were unemployed. So the reason why they when the last week they basically announced it that way because of the fact that they're kind of waiting for people to get back on their feet, and the lockdown altered the job market, so they need the job numbers to recover before they kind of start increasing the rates.
Okay. But let's put this in perspective a little bit because rates are at historical lows. Where do you see them going? Like what's a 5-year fixed rate at right now?
A 5-year fixed rate right now, you it starts now at 3.09. So they've gone up because in the summer you could have probably a borrower last spring could have gone a 5-year fix at 1.90,
Yeah.
and now you're lucky if you can even get a, a 5-year fix at 2.89.
Yeah, but it's still really like in terms of your buying power, like it hasn't made a whole lot of difference. So when we talk about rates going up like that, in terms of your buying power, like it doesn't. I don't think it, excuse me, makes a whole lot of difference. But what do you see? What would a 5-year variable be at right now?
The 5-year variable, you're still seeing the variable is still very heavily discounted. So
Yeah.
I'm still seeing between prime minus zero point 0.5 to prime minus 1. And prime right now is at 2.45. Uh, so the variable is still very heavily discounted right now. It's fundamentally important for people to understand that there's a big difference between fixed and variable. They
Yeah.
fluctuate very differently. The fixed rates are based on the bond market, which is driven by the yield, the
Yeah.
bond yield, versus the variable uh, fluctuates based on prime. So the key thing is really for borrower is to understand, to also know what exactly the discount is, because the discount that you have, even if it's prime minus 1 right now, pre-COVID, prime was at 3.45. The Bank of Canada is not going to increase rates to the rate from 2.45 to 3.45, even as they start to, we're anticipating that they're over this, as spring markets start, they're going to increase the prime rate. I don't think that it's going to go to 3.45 right away. It's going to go incrementally and slowly, just because they also want people uh, lending people to still be able to lend and spend in order to recover the economy. So, for example, if you're getting prime minus 1 right now, hypothetically speaking, let's say the Bank of Canada increases to 3.45, which was prime before the pandemic, you'll be paying 2.45. So you're basically paying the prime rate right now. So I think the key thing is to really find out what is the discount, because it on a long-term basis it might actually be cheaper for the borrower, and you may actually be saving money, even though rates are prime is anticipated to go up. On the long term, it might be better than going on a fixed rate to a
Yeah.
fix.
But I think typically over time, you're almost always better off going well, I think this is a question that if you're watching this and you're wondering, do you do a fixed or do you do variable? That's a discussion they should have with you, because it also, that really depends on your comfort level, right? Like, I think
Yes.
typically my understanding is that if you go with a variable, you're probably never going to pay more than you would have if you had a fixed rate mortgage, right? But some people, but then your payments can vary, so you have to be very comfortable with that. Like, sometimes first time buyers are like, I don't care, I'm going to pay a higher interest rate, but I know exactly what my mortgage payment is going to be for the next 5 years. And if you can't sleep at night because you have a variable rate mortgage, then don't do it, right? But I think typically you would always be better off in the long run paying less interest with a variable rate.
No, I agree. I agree with that. And also, some lenders, when the prime rate changes, they adjust your payment right away, right? So you
Yeah,
already know. And the key thing is also that most people, if they tend to want to pay principal plus interest or even more. So when the rate is adjusted, sometimes it doesn't affect you a lot, because some borrowers have been paying already more or taking advantage of their prepayment privilege, right? Or
yeah,
increasing their payment. So it does affect their principal amount, or the amount that they're owing, but technically, yes, a lot of lenders adjust prime rate right away. This way, you don't end up in a negative amortization at the end of your
yeah.
term.
Yeah, okay. Because sometimes the payment will change, but sometimes just the amount that's going to your principal and the amount that's going to your interest will change depending on,
Exactly.
right? So
Yes.
if that's the case, you would have the same payment, you just may not
Mhm.
be paying as much down. So I think
Yes.
that's the key. So the payment stays the same, but you want to make sure, I mean, the more principal you pay down, the better.
Yes. And the other thing is also, let's say, for example, you're on a 5-year variable and prime keeps going up, but you have like 3 years left on your 5-year term. You can always, which is the option that a lot of people don't know, but you can always switch from variable to fixed. The
Yeah,
only thing is the rate would be the rate at that time. But let's say, for example, the prime goes to 4%, which is not going to go, but let's just hypothetically speaking, it goes to 4%. And then you have 3 years left. Then maybe that's at that moment, maybe that's a good time to go and look at the 3-year fix and say, you know what, maybe I'm going to lock in right now the 3-year fix, because it's a lot cheaper than being on the variable. And there's no penalty to switch it over.
right. Okay. And yeah. So I think the advantage to going with someone like yourself who's a mortgage broker is that you can make sure that you're getting that person into the product that fits them properly, because
Yes.
sometimes people just shop on rate, which is not, you should never just shop on rate. I mean, rate is important, let's be honest, but that should not be your deciding factor. Like, like a tenth or a 20th of a percentage point should not be your deciding factor. It should be, what are the terms? What happens if rates go up? What can I do? All of those things. So I think that's really important for people to know, because some people don't know the difference between going to a bank and going to a mortgage broker like yourself.
Yes, and I think that you're right, actually. And I think that the key thing is to understand what is your long-term goal, right? When you're buying a
Yeah,
home, what is your long-term goal? And if you, for example, are borrowing at 80%, how much do you have on a down payment? If you have the full 20% and you want to borrow at 80% of the value of the home, then you just, if you want to have access to the equity of your house faster, then maybe borrowing at 80% if you can afford the down payment, that will definitely help you. But if you're just looking to lock in and have a secure fixed mortgage payment and put less than 20% down, because insured rates are a lot lower than conventional rate. Conventional meaning that when you put 20% is the your mortgage rate will tend to be slightly higher than if you were um, putting less than 20% down. So it really depends on your on your long-term goal and how what do you plan to do once your mortgage comes up for renewal. Do you want to have access to the equity right away, or do you just want to renew? Are you looking to like do some home renovations maybe in 5 years or 3 years? It really depends on also the products because as a mortgage broker, I'm with Mortgage Scout. We deal with the various type of lenders. So we deal with mono lenders and also we deal with the major the major banks, right? And if you go to a major bank, for example, they offer this home line equity product that gives you access to the equity of your home a lot faster, right? And you can put different revolving borrowing products. So I think the key thing is finding out what is exactly your long-term goal when you're interested in entering the real estate market and buying your first home.
Yeah, that's really important
And
because
what
I
is
think
your
yeah,
and what is your affordability?
yeah, for sure. So I think that's really important. Like that's pretty much our core values that we want to get out to people is let's educate you and give you all of your options and then decide what you want to do next, right? Because that's the most important thing. And your long-term goal is really, really important. I agree. So, okay. So I think we're kind of all resigned, or we all know that rates are probably going to creep up a little bit this year. But my thought personally, I'll get you to give your thought on the market that I don't think we're going to have a downturn. I think it might kind of level off a little bit towards the end of the year, but really, can we afford to let this, the real estate market has kept this province going for probably 10 years, right? We can't afford for this real estate market to go down. There's a lot of factors, right? Like we've got very, very low inventory. So that's going to have to change a lot. Rates are going to have to go up quite a bit. To get more inventory, we need more than just houses going on the market. We need houses built. And the fact is we have a shortage here because number one, we have a material shortage, right? There's a lot of material people can't get, and we have a
Yes,
labor shortage.
lumber.
So
Yes,
yeah, that's a huge thing here, right? So even if we had the land and the material and everything else to go, we don't have the labor force right now to build all those houses. So we're a little ways away, I think, from this market really turning around. But there's still some great opportunities out there, and I think you got to think outside the box. But yeah, so it'll be interesting. But we'll talk about this a little bit more. But I think that the most important thing is, if people have questions, that we're going to put your contact details in the chat here, so everybody has it. And
yes,
I think for everybody's like your own personal questions, because everybody's situation is different.
it's different.
Yeah,
Yes,
they can reach out to you and find out. And then we also, for anybody out there that's watching as well, we have a report on, the biggest mistakes not to make as a buyer. So I'm happy to pass that report on to you. And it just
that would be
outlines,
great.
different things to look out for, because there are some things you need to look out for sure when you're buying. And I can pass on that report to anybody who's looking for it. And yeah, save you
Yes,
some.
and I think for especially for first time home buyers, I with this market, I always say this, I'm a big believer on mortgage pre-approval. The pre-approval will allow you to know what is your maximum affordability. So if you were thinking of entering the market, let's say in the springtime, house prices have gone up tremendously. So if you wanted to buy that right now, if you wanted to buy a house for $1 million and you don't know if you would qualify, this is the best time to get a pre-approval. And also pre-approval allow you to lock in the rate for between 90 to 120 days. So you lock in the rate, you get a pre-approval. If you see that, like if you were looking to put 20% down and you're a little bit short of that 20% down, it allows you to save right now. This way you can enter the market in the springtime because rates are still good. It's still it's always a good time to enter the real estate market. The key is to just find out your affordability, What is your long-term goal plan? And I also agree with you in terms of rates are going to start going up. They're not going to go up drastically right away, but rates are going to start fluctuating. We're going to see a slow coming back where it's going to start increasing and increasing. And yes, that's also because of the lack of inventory that we don't have right now. And we would have to wait until we see what the government is going to, because the Liberal government did promise that they were going to come up with all these different plans for to help with the housing crisis, which we have not yet seen. So, but yeah, I think that there is the activities are still going to be very busy this summer. However, it's going to slow down maybe at the end of 2022 and starting at the beginning of 2023. But yeah, because of also the lack of inventory, and like you just said, right now there's a lack of supply to build also, and even the new construction, they're still going to take at least another 2 to 3 years for them to be
For
fully
sure.
completed.
For sure. Yeah, absolutely. So yeah, I totally agree. Yeah, so we'll see how this impacts, and we'll talk a little bit more on the next one about the rates and what's going on at that point. But it definitely is a busy time, and you're right. It's always a good time. Like, you just got to look at your own situation and evaluate: is it the right time for you to make a move? Is it the right time for you to
Yes.
sell and buy? Is it the right time for you to sell? Whatever. The other issue that we have here, I think, that is a really big impact on our market is that we typically, like, here in the GTA, we're used to a market where we have low inventory and prices are going up. And so if people were moving from here to, let's say, the outskirts, like Kingston, or going north or going west, whatever, or changing provinces, you had an advantage because in those, their markets were very stable and didn't move very much. But right now across Canada, we have this situation. So all of this together is just like a perfect storm, right? Like Thunder Bay, Sault Ste. Marie, Timmins, like all of those places are booming and they're experiencing the same thing. So it doesn't matter where you're going to, in most cases, a low inventory market, right? So
Yes.
it doesn't matter. Like everything is like keeping the real estate market going.
Yes, because yes, the pent up demand due to the lockdown, the pent up demand for people that now were used to working from home and now, sorry, working in the office, to transitioning to working from home, and people have been moving to the suburbs and all of these areas, and that has actually made the increase in the value and increase
Yeah,
in prices because people have started moving. So you're seeing even like Burlington, Barrie, Bradford. Now you're seeing house prices are uh, over 800,000
yeah,
just because of the fact that the demand and people have been moving to those areas. Actually,
yeah.
Mortgage Scout released last year a really good. It's on our blog on the website. They released a really good graph that shows how the markets have been pumped up in all of these different St. Catherine, like you said, like how they've increased due to the pandemic and the demand of people wanting to moving there in
Right.
those areas.
Are you seeing a lot? Are you seeing a lot of people who are selling their houses and then moving out, and families kind of combining?
Yes, I'm seeing a
Yeah,
lot of that. People are selling and moving outside of the Toronto, even further than the GTA sometimes, just because they get more space too, right?
yeah,
Um, and even though the prices have gone up, it just makes more sense because they get more square footage than if they were to buy something in Toronto.
yeah,
Oh, yes.
yeah. Perfect. Okay. Okay, that's great. So I think what we'll do is we'll wrap it up for today, but so if anyone wants to get a copy of that report from you, where should they go? That report, that I would like to get that from Mortgage Scouts
If
about the pent up
if
demand.
you go to the Mortgage Scout website, mortgagescout.ca, it's
Okay.
actually under our blog section.
Okay.
And under the blog section, you see we have a cup there. They have great they publish really great articles, but there's actually one about prime and how interest rates have increased in the last 50 years, and there's a great graph, and there's also a graph about the different markets that have been booming due to the pandemic.
Okay, perfect. And I'm gonna put your phone number in here too. Give me your,
Yes, my phone number is, and if anybody wants to reach me, my phone number is 647-896-2575, or you can email me at christelle.mwamba@mortgagescout.ca.
okay, so I'm going to put that in here and then I'm gonna put mine, Christelle.Mwamba, right?
Yes.
At Mortgage Scout.
Yes, at mortgagescout.ca.
Okay, so people can contact you there if they want that information. I'm going to put my information in here as well if you want to get in touch with me. Always happy to discuss your situation and see what's best for you at this point, right? Because that's the big thing. What's the best thing for you to do at this point? It's different for everybody, so get all your options and then decide from there what to do. And if you want to get a copy of our free report that outlines the 6 biggest mistakes that home buyers make, so you don't make those mistakes as well, I'm happy to send that to you. You can reach out to me,
Yes.
DM me here, call, text. I'm pretty easy to get a hold of, I think, most times. So thank you so much, Christelle. I'll see you in a few weeks again. We'll be on here, and until then, I'm sure we'll be in touch because you always deal with our people anyway. So
Yes.
awesome.
Sounds good. Thank you, Sandy. Have a good day.
Thank you. You too. Bye.